Well, hello everyone, and welcome to today's webinar looking at how Serco use quality control in AP to maximise profits. And having the right kind of quality control in place is essential in order to address, amongst other things, issues of cost and efficiency. It's nothing new, of course, and many organisations have invested time and money into developing processes to address this. However, despite many of them having several layers of controls plugged into their systems, errors can and do still happen. So today we'll be hearing from two people who will help you to see that there's an alternative to having to deal with the fallout from a less than efficient system. And we'll be hearing from Caroline Chapman of Serco and Daniel Kimpton of statementmatching.com. Okay, so before I hand you over to Caroline, let me just tell you a little bit about your presenters today. I'm Ellen Leith, and I'm the editor of PPN, and as most of you will know, I run the Purchase to Pay network site with the aim of offering P2P professionals a forum where they can learn about new industry developments and find out how to overcome some of the challenges and issues facing the departments. We'll also be hearing from Caroline Chapman, who's worked for Serco's Finance and Accounting Shared Service Centre for 8 years. She's responsible for managing the processes on behalf of Serco that are operated by the F&A SSC within transactional processing, such as P2P, order to cash, treasury cash management, and technical accounting. Across those areas, she's responsible for process improvement projects, TP service delivery, quality, and risk and controls. We'll also be hearing from Daniel Kimpton, who's been delivering process improvements and automation projects for around 12 years and has vast experience of working in accounts payable. Statementmatching.com is just one of the solutions he has at his disposal to help customers achieve real efficiencies and improvements. Right, so just before we begin, here's a quick look at the agenda for what we'll be discussing today. Caroline is going to take you through some of the functions of the F&A activities carried out by the Shared Service Centre and some of the key facts about the P2P team. She's also going to focus on what their objectives were, some of the challenges they faced along the way, solutions, and what the plans are for the future. Daniel Kimpton is then going to talk a little about statementmatching.com's solution and how it effectively addresses some of those challenges faced. Okay, so just before I hand you over to Caroline, please note that this is an interactive session, and you do have the opportunity to ask questions by adding them into the free text box in your GoToWebinar panel, which is just over on the right-hand side of your screen. If you type those in, I'll ask Caroline or Daniel to address them at the end. Okay, if I hand over to you now, Caroline.
Thank you for the introduction, Ellen. I just quickly would like to go over the overview for today's presentation. I've broken it down into 3 main areas, which is an introduction to Serco, who we are and who our contracts are, an introduction to the Finance and Accounting SSC. If I say SSC, I do mean our Shared Service Centre, the way that we operate, the activities which we carry out as part of our service footprint, how the P2P team operates, and which ties us nicely into how we use quality control in P2P and how that can assist with maximising profit in the process. So if I just move on. So who are Serco? Well, we're a leading provider of public services. Our customers are governments or others operating in the public sector. We gain scale, expertise and diversification by operating internationally across 5 segments. And we try to succeed by being the best managed business in the sector. Serco has, over the past 2 years, been through extensive business change program. We moved out of the FTSE 100, we're now in the FTSE 250. We have over 700 contracts globally. We have over 120,000 people working for us in our contracts. We are an international company and we have now revenues of about 3.5 billion. Our current service footprint for the organisation is mainly been in the UK. As you can see, we have some strong areas which we operate in other global regions. The business change programme, which we've just been through, has asked us to refocus on our common 5 sectors, which is justice, immigration, defence, transport, citizen services and healthcare. And what we will be doing over the coming years is trying to be strong in all of these different geographies. Some examples of the contracts is London Cycle Hire Scheme, which is commonly known as the Boris Bikes. Prisoner Escort Custody Service. If people live in London, they would be familiar with the white vans with the Serco name on it, taking prisoners to court or taking them, unfortunately, to the jails if they need to go back there. In the Middle East, we run Dubai Metro. In ASPAC, we run Fiona Stanley Hospital, and we run the Immigration Centre on Christmas Island. So you can see just through that small scope of contracts just how diverse our business can be when we say we do service delivery for contracts for the government. So the Finance and Accounting Shared Service Centre consists of, it sits within the Finance Operating Model. The 3 components of that model: Group Finance, which is run by the UK, it sets policy, it owns standard global processes, it's responsible for budgeting, forecasting, and it's responsible for the reporting to external stakeholders, and especially the city. Within each of our different geographies, we have what we call business finance teams. Now, these people should be there to support and partner with the operational staff within the contract to make sure that services we're providing are done in the most efficient way. But the business finance team should also make sure that the contracts are operating to group policy. The Shared Service Centre for Finance and Accounting is based offshore. It's run out of Gurgaon, which is in northern India, very near Delhi. We have a full service of transactional processing run through there. We also have HR and payroll. I think a really interesting thing about the Shared Service Centre is it is responsible for continuous improvement for the parts of the processes which we actually operate. So even though group set a global standard, we're responsible for making sure that our aspects and service delivery is done in the most cost efficient way. So the service footprint of the Shared Service Centre is for 6 main processes: purchase to pay, order to cash, R2R, general accounting, treasury and cash management, and technical accounting. So 4 of these processes fall within transactional processing: purchase to pay, order to cash, treasury and cash management, and technical accounting. As Ellen said in her introduction, I am responsible for these 4 different process areas. Apart from making sure that we are operating to policy, continuous improvement is very much one of my main focuses. So how can we deliver the process to an improved quality or to maintain quality at a lower cost? So I'll just talk a little bit more about the Shared Service Centre and in particular the Purchase to Pay team and some of the projects which we have run through the team in the last year. Globally, we process around 600,000 invoices. Our business is going through change, so the number of invoices has diminished. We nearly a million, so you can see just how the business has evolved over the past couple of years. We process paper and PDF As a company, we are starting to focus more on electronic invoicing. Electronic invoicing helps us to deliver better controls around receipt of invoices. I'll talk more about that later. We were originally set up in 2006. For 6 years, we had a third-party agreement with Genpat, but because in 2012 Serco decided to change their markets that they were operating in, they bought a business process outsourcing company in India, so we had to move the shared service centre to be run from our captive BPO. We divested this in 2015, so we're now under a third-party agreement with the divested company, which is called Intellinet. We have a P2P help desk. We run voice and call contact through there, and we have a team size of 54 people. I'm trying to continuously reduce the number of people within this team because it's still quite large for the number of invoices that we're processing. One of the projects which we have at the moment is to increase, obviously, electronic invoicing, because by doing that we're increasing our levels of automation. We use SAP, and our bolt-on into SAP for invoice processing is Process Director. As I said, my role is to try and continuously reduce the number of people within the SSC. However, my other side of the role is to make sure that what we are doing is and the processes that we're following are delivered in the most efficient way to the highest degree of quality. We employed a third-party AP recovery company a couple of years ago, and based on some of their findings, we found that maybe some of our controls, which we thought were tight or have been managed the best they can using the products that we had on offer to us, actually haven't been giving us the results and the findings which we wanted. So the AP recovery audit did a very good job. Unfortunately, the cost of that exercise has led to Serco about 14-15 months ago saying, okay, we need to look at how we can implement quality control issues to maximise profit. So less waste, more efficient processing. Therefore, I was given the business objective of increasing or improving our supplier reconciliation process. Because we were paying the AP recovery audit company for recovery of unidentified credit notes and for enormous payment errors, overpayments, and for the recovery of all those items, I was set the objectives of how we could, make sure that we did have better, accurate supplier balances. What I mean by that is the audit actually proved to us that we didn't have good, timely receipts of invoices and credit notes. So that's one of the reasons why we're looking to use electronic invoicing, because that could help control it. Another way of doing that was, okay, well, you should be able to constantly reconcile your supplier and, within 1 or 2 days from issue of invoice or credit note, make sure that it was posted into the ledger. Obviously, I paid a substantial amount for detection of inaccurate invoice processing. For this, one of the main reasons was we had duplicate payments, but as we all know, we shouldn't have duplicate vendor accounts. But that was one of the issues which Serco have had with their vendor master. That is being looked at under a new transformation program. But we had to do something in the meantime to cut down on the risk of those inaccurate processes for invoices happening in the future. Obviously, maximising profit. Well, if we got missing credit notes, if we had duplicates that were unidentified overpayments, it's all money which has gone out of the door. We have been through a business transformation program, so every penny does count. So making sure that we, if these mistakes were going to happen, that we could do the recovery ourselves internally, so we were not paying for the audit recovery company to do a job which we could actually do a lot better and quicker ourselves. Because we have a third-party offshore shared service centre, it's really important for myself working for Serco as an onshore team. Yes, I did get to go and visit them, but it's not as often as I need to. So I need to have easy ways of being able to monitor performance and easy ways of being able to cross-reference what they're actually telling me against factual information. So there is a long debate about needing to know that we needed to reconcile and how could we actually do it, because the challenge that we had is the process that we were following has obviously led us into the issues that we had with the AP recovery audit. So if I just tell you the process and talk you through what we were doing before we automated using statementmatching.com. We had a team of 4 people, and they were on average reconciling 400 statements per month, and we found that 450 was our core suppliers, but we were not actually, changing the scope or the frequency of the suppliers. So yes, we may be looking at 5% of our supplier volume, but we had 95% of suppliers which we weren't touching. The process meant that we had to take 3 different data dumps. And then once we got the different data dumps, we then had to put the data into an Excel spreadsheet and use VLOOKUPs to do the reconciliation. Because of this, we were bound to always ask for a statement in Excel format. It was really very, very time consuming to do the reconciliation. Some of our vendors will have 10,000 lines, so it was taking nearly 2 to 3 days to go through, do the validation, and add some of the core data that Serco have to add as their client requirements. It was only a one-way reconciliation, so we knew that we were exposed. We were just reconciling what was on the statement to SAP and Process Director, not what our ERP system was saying. We've got outstanding, and obviously if it's missing on the vendor statement, I had no way of being able to pick that up. Errors would be detected not just with ERP, but anomalies with amounts and processing errors. The manual tracking was just basically, this is the name of a vendor, and yes, we've got a statement from them this month, and yes, we've reconciled it. So absolutely no value whatsoever. If I wanted to see what was on the statement, I'd have to go into each and every individual statement and create my own manual tracking, which was very inefficient. So we had no value in the process. It just felt like I have 4 headcount, just basically sending out an Excel spreadsheet, knowing that there's lots of information within that spreadsheet, but there's nothing that I could do about it. So how could we get more value out of the process? Until we decided to automate or looked at the possibilities of automating, my hands were tied, because increasing headcount was never an option. We're a diminishing business, and so therefore increasing headcount in this area was not an option, even though the business objective said this is how valuable it is to reconcile supplier statements. So the way forward was automation. It's quite a quick discussion, but it was very hard to be able to find a partner who we could work with, who we felt would meet our requirements. And then luckily for me, I got a marketing mailer, and I decided to contact Statement Matching to have a look at their product. And I was absolutely blown away with what I saw, because it did actually meet my expectation. And for me to find things that meet my expectation is quite difficult. I normally don't believe that people can meet my expectations, but Statement Matching has done that. But we chose to go with Statement Matching initially, because not just because it was my decision, but because it was a cloud-based product. So I don't know, with large organisations, IT can be a blocker to actually being able to improve processes and get the benefits of process improvement. So by using the cloud-based product, it took out 6 to 12 months of IT unhelpfulness. We liked it because of the out-of-box integration with SAP and obviously Process Director. I know that it can be used with many different products for invoice processing, but in our case it was because, yes, we understand Process Director and we understand your data. Because it's online and cloud-based, I can check and see what is being done anywhere, because the product obviously provides transparency as long as I've got an internet connection. We liked the way that the product would identify errors, and we liked the way that it was reporting those errors. So it's very easy for us, once it's been identified, it's very easy using the tool to be able to track those errors. Obviously, very, very easy reporting for both the shared service centre, myself. We really like the way that the tool has a standard set template for the statements, but we like the flexibility that it gave us to still be able to download in Excel for those customers, vendors that we need to attach more information on. When we saw the demos, we thought it was very user-friendly, and it covered the gap that we had, because obviously it's performing the two-way reconciliation. So we've been using statementmatching.com for the last 9 months. We use it each day. We do a daily extract from SAP, so even though there is a slight time lag, it was impossible for us to do a real-time integration and transfer of data, but we find that the daily extract works well for us. We use it across all our different geographies, so in the UK, in the Middle East, and in ASPAC. Where possible, just in terms of efficiency, we send the direct dump directly from the tool of the statement. We were able to pull through all our rejection reasons into it, so I'm not anymore dumping things into Excel and adding data from different sources, so it added to productivity gains. We were able to change from the activity being a very low value activity to one which adds value. Our team were tasked with now making sure that they identify, which the tool allows them to do quite easily, missing invoices and credit notes. But it means that I can easily track, and they can track their progress of actually being able to ensure that we've obtained that document, because it's all very well identifying it, but for me, I've not taken the value of it until that document is actually posted into the ledger. We ran another AP audit in the last 6 months, and the AP recovery firm were quite astounded at the process that we've made in the credit note recovery area, where they obviously had a lot of business through the recovery of our missing credit notes. This time that was at a minimum. So it's been really encouraging seeing that we now internally can manage these processes, and we're not having to spend money on an AP recovery audit. So the really good news for me is we constantly now, we reconcile over 1,000 statements. It normally trends around 1,100, but the most exciting part was we haven't had to headcount. So obviously that meant that productivity has increased by more than 1,000%. By increasing, sorry, not 1,000%, 100%. We have a really motivated team. So normally when you get people to work twice as hard, they're not motivated to do so because I haven't paid them any money, I haven't given them any incentives. But now they really enjoy the value-add activities that their job actually gives them. You know, they're tasked to do the identification and recovery of missing invoices and credit notes. They're tasked to make sure that we don't have any outstanding invoices on our ERP system which are no longer on the supply statement, and until we have been able to eliminate the issue of duplicate vendor accounts, it's really important that that process is in place. For me, I can access statements at any time. I don't have to be in the office. People on my onshore team here can access them, so we're not having to wait. We can do an instant refresh. So in the old world, we might have to wait 2 days to get a new statement for one of our high volume suppliers. And we now have a monthly dashboard which is shared with senior stakeholders, and the recovery of the added value activities is actually monitored and tracked there. So all in all, by being able to automate, we really have got benefits in terms of we're now flexing the number of suppliers. We have a fixed 500 suppliers that we have to reconcile, but we're now able to look at the other 10,500 suppliers and select 200 or 300 suppliers, different suppliers each month, based on risk and some criteria from group. But we're now able to cover within the year our suppliers. So as a control aspect, we're very happy about that. The added value activities, which we've really embedded, the missing invoices, credit notes, ERP, have had a cash impact, which has been looked on very favourably. And obviously the tool has now shown where we may have data errors. So we've worked with a number of suppliers where we found that the statement that they're producing is slightly different to invoices. Sometimes there's different reference, or sometimes we're actually finding that, you know, a statement will actually show a different amount to it to the actual hard copy invoice. So we now have a process where the team will go back and investigate those data errors. So just focusing still on the data errors, we're now able to look, see, we're satisfied that we've got the credit note recovery as tight as what it can be, and we've got internal processes built in to make sure that if an AP recovery audit does have to look at that aspect again, it will be minimal. So attention now is really on using the tool to fix incorrect data errors. All this, it does take time, but we're now at a point where we've identified what the root causes are, and we're putting action plans in place to be able to make sure that they're not there in future. Obviously, until I get rid of my duplicate vendor accounts, duplicate payments is always going to be a potential higher risk. We're starting to try and ask suppliers as opposed to sending in a statement to our AP help desk or putting it in the post, please can you send it to the portal directly yourself. Obviously, I guess it's like efficiency by not having to do that, but the supplier knows that as soon as they sent that statement, it's going to get picked up very quickly, and they should get a reconciliation back within 24 hours or even lower. Talking about the duplicates, as I said, we are exposed to duplicates because of our duplicate vendor issue. So we're now looking to see how we can use a very similar tool called duplicatematching.com to help us identify and stop any potential duplicate payment happening in future. The key to that is, early identification and being able to stop the payment of the invoice before it's been made. We're trying to move everything from the retrospective back into a more proactive cycle. But without the automation, without the tool, we wouldn't have been able to achieve what we have, which is putting quality controls around meeting the business objectives and actually taking pride in being able to demonstrate the results to senior stakeholders and knowing that we've got the correct controls in place because it's been proven through the AP recovery audit and the reduction in money which we're actually paying them. So I've just reached the end of my story and presentation, so I'm just going to hand over to Daniel, who will talk a little bit further about statementmatching.com tool.
Thank you, Caroline. So, yeah, hi everyone, my name's Daniel Kimpton and I work for statementmatching.com. So I'm just going to use the last 8 minutes of the presentation just to give you a very quick sneak peek at the system, really. But if anyone wants a live demonstration, they can contact her at any time. I think Caroline, Caroline with the Serco story went through, all of the business benefits. Obviously Serco had a particular focus, around quality control after they did their AP audit recovery. But I think really all of the benefits were covered in Caroline's presentation. So I'm just going to do a solution overview and just explain quickly, how it works. So, how do we get data in here from your ERP system? How do we get statements in? And then what happens? And then I've got some screenshots of the system so that you can see from a user's perspective, actually what it looks like. So, like Caroline mentioned, we need data from your ERP system. The way it works with most customers is the report will run overnight, and then we'll get files sent to us automatically. So nobody in finance has to do anything. And then from our side, the data gets imported into statementmatching.com, and then our system reflects your accounts payable ledger effectively up to the previous day, which from a statement reconciliation perspective is fine. The way we get statements into the system, there's two possible routes. Excel statements, accounts payable can actually import Excel themselves directly. There's an import function on the website. You can go in there and say, right, this column is the invoice number, this column is the invoice date, and so on, and then you import it, and that's it. You can then go and look at the results. But you can also let suppliers do that as well. So you can give suppliers a portal view to actually go and upload their own Excel statements, which is probably the best option. But you've got to get suppliers to do stuff, which is sometimes difficult. Now, if I look at my customers, they'll get some Excel statements, but actually most statements still come through as paper or PDF. Now, so for those, we actually provide a managed service where if you've got a piece of paper, you can actually scan that to an email address, which is generally customer name at statementmatching.com. And then as part of the service, we'll extract the data, and then the statement will be on the system, reconciled within 24 hours. So all you've got to do is basically get it into an email inbox. Obviously, if it's a PDF statement, you just have to forward the email on, and again, the statement will be on the system reconciled within 24 hours. So when I say reconciled, what happens is it basically compares, what's on the supplier statement to the data that we've got from your accounts payable ledger, and then it basically gives it a status. So you get an overall status for the statement, and then you get a status for each line of the statement. And I'm going to explain on the next screen or the one after what those statuses are. Now, the nice thing from an accounts payable user's perspective, obviously we've automatically reconciled the statement, so we've done that part of the process. And as a user, you can actually go in and prioritize the exceptions. So, for example, if something's fully matched, then great, it's fully matched. It then means you've got everything. We're all happy. But actually, the ones that you want to go and look at are where you've got a significant exception. So these are typically where there's money involved. So what people do is they'll say, go and show me all the statements where there are missing credit notes, because I want to go and get all of those requested first. Or go and show me all the statements where I've got incorrect amounts, where actually it's higher on my ledger than it is on the statement. It's a potential overpayment. So you can sort of prioritize by exception reason. And then also the other thing is you can actually communicate the results to suppliers. So you can send reconciliation reports to the suppliers to say, yeah, all of these are matched. These ones are missing, so I need a copy. And you can actually give them the status of the document. So if it's paid, you can give them a payment reference. If it's posted, you can say, right, this is the due date. So you try to give the supplier the information that they would typically ring up your accounts payable team to ask, invoice status type stuff. So you can send reports, but you can also give suppliers access via the web, like I said earlier. So a quick couple of screenshots, because I've got 3 minutes. I'm looking at my clock. So on the screen currently, this is what you would see when you log in. So this is the dashboard, and it shows two things. In the kind of middle section where you've got the green dollar sign, I've got a series of reports. So I'll just explain a couple of them. The first one, the green dollar, this is people's favourite report, is the missing credits report. So it basically gives you a total value of missing credits across all of your statements, across all of your vendors. If I drill into the report, it's going to give me all of the statements where I've got missing credits, and it's going to put the highest value one at the top of the list. And then effectively you would then go in and then you would then go through and basically request missing credits from all of the suppliers. But you can actually manage the statements by status. So let's say show me all the statements where I've got missing invoices. You can go in and do those. Show me all the statements where I've got documents on the ledger that aren't on the statement, and so on. The other one I wanted to say was where it says 70%, 14 out of 20. These are my top vendor reports. So if you've got a target, in your shared service centres to say, I've got to do my top vendors by, invoice value. So I've got my system to be, top 20, but it could be top 50, whatever. This is how you basically make sure that you hit that SLA. On the right-hand side, these are the statuses that a statement can reside at. So you can see I've got things like fully matched. I've got things like incomplete matching, which is where something's missing. But I'll go through. I've got a search screen. So this is how, if I was a user, I can search for certain suppliers, certain companies, certain statuses. If I hit search, it basically gives me a list of statements. So you can see each one is a statement. If I select one, I've got to go really quickly now. This is basically what the reconciliation looks like. So on the left-hand side, you can see I've got the data from the statement. On the right-hand side, you can see I've got the data from your ERP system. So on this example, everything is matched, but the first line is missing, which is a credit note. So I'll quickly show you how you can email the vendor from the system. So you would click email vendor. The email address is, that you send the vendor to or from is basically your work email address. So any replies will come back there. You can put whatever message you want, but the point is the vendor gets a report, which is like a PDF attachment. So on this example, you can see the first line's missing. So you can see I'm asking the vendor for a credit. You can also see it's an American date format if you're in the US, and obviously it's the wrong way around if you're in the UK. But you can see I've got some due dates, and there's one that's posted, so you can see I've got a payment reference. but this is really useful information to send to the supplier. And you can also add notes at a document level as well. So I've just asked the vendor to send me a copy. So you would want to add a note to make sure that you, you know, let's say this credit note's still missing next month when we reconcile the vendor. You can see that I've actually already requested it. Anyway, so that's me done now because there's 5 minutes left until the end. So if you've got any questions, I think Ellen is going to take questions now, and I'll just close on saying that, you know, we do offer a trial period on statement matching. You know, please drop Ellen an email after the presentation. But yeah, thank you for listening, and I'll hand back to you, Ellen.
Okay, thanks very much for a very informative webinar to both you, Daniel, and to Caroline as well. We have had a question in from somebody who would like to know, and I guess this one's for you, Daniel, how well your solution integrates with their existing systems.
Yeah, well, it doesn't really matter what ERP system you use. Also, if you use multiple ERP systems, which many of my customers do, they often use add-ons as well as their ERP system. So, I mean, Caroline happens to use SAP and Process Director, but I've got customers using, you know, Lawson, Great Plains, Oracle, JD Edwards, Dynamics, even like green screen applications. It really doesn't matter. All we need is some invoice header information and some supplier data. You know, it's actually quite simple stuff. So, you know, whatever system you have, we've probably worked with it before. It's just a report that's going to run, and you just need to meet the data requirements. That's all. But I do have documentation for what the data requirements are, Ellen, if anyone would like to see them.
Okay. All right. Thanks, Daniel. And another one, which I think again is for you. Well, I'll put it to you first, Daniel, and see. It's can statements be sent in bulk or one statement per email?
Yeah, often customers send them in bulk. So what they'll do is they'll open the mail in the morning, and then they'll basically get a pile of statements, and then they'll put them on the scanner, and then when they hit scan, it will basically create an individual PDF, you know, per statement. You know, that's typically how it works, and then it'll create an email, you know, per attachment as well. But you know, if it creates like one email with 50 attachments, that's fine. We kind of take what we get given. But typically customers do them as a batch. But then obviously they'll be uploaded to the system individually as statements. But then you can merge them together as well. You know, there's lots of different options.
Okay, and another one, which I think is probably more aimed towards you, Caroline. Was there much training involved, and was there any resistance to the change that the EAP system had?
There was training, but this is why I like the statementmatching.com tool, because all my guys were offshore in India, and I didn't pay for Dan or anybody from Statement Matching to go over there to do the training with the guys. So because the process is very simplistic, we're able to do it over a couple of WebEx sessions and the supporting documentation to go with it within detail. At first, the team were scared because they thought automation means get rid of people. But as I said in my presentation, now those people realise that they're adding value to the process because of the add value activities that they're doing, you know, collection of the missing documents, making sure we've only got the correct invoices posted to the system, and now working on the data anomalies. So they actually feel like they've got more value, and obviously for me, their productivity and what they're doing has increased. So it's gone down extremely well.
Okay, fantastic. Thanks, Caroline. And then one more question. I know there have been a number of other questions, but we can certainly address those afterwards. One final question for you, Daniel. Is statementmatching.com Sarbanes-Oxley compliant?
We've got customers, you know, we've got lots of customers in the US who obviously have to be Sarbanes-Oxley compliant. Now, there are, I know, I'm not a SOX expert, but I know there is a SOX requirement where you have to reconcile your material vendors, you know, on a periodic basis. I don't know whether it's monthly, and obviously by material that would be, you know, based on some sort of value. I don't know what the exact rules are, So yeah, I mean, that is a business driver for customers using the application, is to meet those, you know, SOX compliance requirements around reconciling your material vendors.
Okay, thanks very much, Daniel. We've also had a number of questions about the slides, and these will be available afterwards. And as I said, the other questions that you have, we'll certainly address those after the webinar and make sure we email those answers back to you. And if anybody wants to take any of those questions further, then of course Daniel can certainly help you in terms of the solution, and I'm sure Caroline will help you in terms of anything to do with Serco, and you can just email me and we'll get that back to you. So thanks once again for attending, and do keep a lookout for the next PPN webinar, which will focus on SAP's successful discounting strategy, and that's going to be on the 21st of April. And I hope you'll be able to attend. In the meantime, thanks again to Caroline and to Daniel, and thank you all for joining us. I hope you enjoy the rest of your day, and thanks again for attending. Thank you.